Netflix is on the verge of closing below this monthly uptrend line. You can see that a bit better on the weekly chart. Today you are retesting that trend line. You did close below it on the daily chart, but I was referring to closing below it on the weekly chart. And again, what's significant about this trend line is that the origins come from the monthly buyer's level down at 175. So why is price pulling back? Let's get into the news before I give you the setup. This article is coming from investing.com. Netflix shares dip amid concerns over future growth and margins. So the shares have been falling all this week. The slump in price is attributed by some to remarks made by the company's CFO, Spencer Neumann, at a recent Bank of America investment conference. He pointed out during the conference that while Netflix has been increasing its operating margins by 3% points each year recently, maintaining this rate of growth might not be sustainable. And I think that's what spooked Wall Street. In response to those comments, we had an analyst at Benchmark where he retained his sell rating and 223 target for Netflix. He speculated that the 5% drop in the stock price on Wednesday was likely due to Neumann's remarks about striving for a balance between revenue growth and margin improvement. Now, regarding the margin improvement, revenue growth, Spencer Neumann mentioned that Netflix continues to implement strategies like paid sharing to curb password sharing and an advertising support subscription tier. Neumann also noted that despite the U.S. accounting for the highest level of revenue per member, 90% of Netflix subscription growth is generated outside the U.S. Neumann also revealed that Netflix has not increased its prices since early 2022, mostly relying on paid sharing as the primary strategy to boost revenue growth this year. All right, so that's very important. They're not increasing their subscription prices that can instantly boost revenue. They're going a different model, the advertisement model. But you got to remember, a lot of customers are switching to the free ad subscription model. So that's eating into their margins as well. Then you had another analyst at Pivotal Research, and they said despite maintaining their buy rating and a street high $600 price target, they did lower the target for the fourth quarter average revenue per member growth from 4% to 2%. So going back to the charts, really the best level to get long is roughly $20 lower. And what I love about this level is that you're going to have resistance support traders, trend line break traders sell right into the hands of weekly buyers. So let's adjust that. Again, what I like about this level is that you had a rallying price of base and candle, then a gap higher, which took out the pivot high to the left and these what was sell levels in the past. So again, best levels to get long is roughly $20 lower. Weekly buyers are waiting for price to come down. Look for a first target at the 4. We're going to lower that a bit due to these selling wicks at the $440 level. Thanks for watching. Subscribe. Please like the video.